So problem number 17. Problem number 17 we have discussed. We'll see problem number 17. A trader whose current sales are in the region of 6 lakh per annum and an average collection period of 30 days. So present sales 6 lakh and average period 30 days. Wants to pursue a more liberal policy to improve the sales. अपने credit period को बढ़ाना चाह रहे हैं, sales को increase करने के लिए. A study made by the management consultant review the following information. Credit policy A, B, C, D. Proposed policy A, B, C, D. 4 proposed policy. Increase in collection period. Presently 30 days are allowed. There is an increase of 10 days. So it will become 40 days. A policy 40 days. B policy increase by 20 days. So 30 plus 20, 50 days. C policy 30 days. 30 plus 30, 60 days. D policy 45 days. 30 plus 45, 75 days. And increase in sales. Presently sales are 6 lakh. It will become 6 lakh 30,000. 6 lakh 48,000, 6 lakh 75, 6 lakh 90. And present default. Default means bad debts. Bad debts are 1.5%, 2%, 3%, 4%. The selling price per unit is 3 rupees. And the average cost per unit is 2.25 and the variable cost is 2 rupees. Current bad debt loss 1%. Required return on additional funds 20%. Assume 360 days in a year. Which of the above policies would you recommend and why? First of all, in working note, we calculate the number of units. The number of units मालूम करने के लिए formula है total sales divided by selling price. Total sales divided by selling price per unit. You will get number of units. So presently 6 lakh rupees sales. So 6 lakh divided by 3, 2 lakh units. So presently we are selling 2 lakh units and selling at the rate of 3 rupees. A policy 6 lakh 30,000 divided by 3, 2 lakh 10,000 units. B policy 648 divided by 3, 2 lakh 16,000. C 6 lakh 75,000 divided by 3, 2 lakh 25. D policy 6 lakh 90,000 divided by 3, 2 lakh 30,000. So first working note we have calculated number of units in the present policy and proposed policy. Now average cost per unit 2.25 less variable cost 2 rupees. So subtract कर देंगे 2.25 minus 2.25 is the fixed cost per unit. And presently number of units we are making 2 lakh. Present number of units are 2 lakh. So total fixed cost 2 lakh into 0.25 is 50,000. The total fixed cost is not given in the problem. We have calculated 50,000 total fixed cost. It will remain same whatever be the level of activity. Now evaluation of proposed credit policy. Present policy column. Proposed policies A, B, C, D. Credit period 30 days, 40, 50, 60, 70. Number of units just now we have calculated. Sales at the rate of 3 rupees. So 3 into 2 lakh 6 lakh. 3 into 2 lakh 10,000, 6 lakh 30,000. Like this we have calculated sales. Variable cost 2 rupees. 2 into 2 lakh 4 lakh. 2 into 2 lakh 10,000, 4 lakh 20,000. Like this we have calculated. Fixed cost 50,000. Total cost we have taken. The sales minus total cost will get the profit. Increase in profit we have taken. Bad debts, presently bad debts 1%. Then 1.5%, 2%, 3%, 4%. On sales. यहाँ sales है आपके पास. ये sales के ऊपर ये percentage apply करेंगे तो bad debts आ गए. Increase in bad debts 6,000 to 9,450. तो 9,450 minus 6,000, 3,450. 12,960 minus 6,000, 6,960. Increase in bad debts. Investment in receivables. It is given a year consists of 360 days. So 4,50,000 total cost into 30 by 360. You will get 37,500. उसी तरह 4,70,000 into 40 by 360. You will get this amount. Similarly, 4,82,000 into 50 by 360. Like this we have calculated the investment in receivables. Now additional funds invested in receivables. कितना increase हुआ देख लीजिए. 52,222 minus 37,500. 66,944 minus 37,500. 83,333 minus 37,500. We got additional funds. Now return we require on additional funds at the rate of 20%. So 20% you calculate. That's it. So you can pause at this screen and then copy down all the values. Now I am coming to the trade-off between benefit and cost. proposed policies. Increase in bad debts. Return on additional funds invested in receivables. Increase in profit 10,000, 16,000, 25,000 and 30,000. So 10,000, 16,000, 25,000 and 30,000. Now increase in bad debts 3,450, 6,960, 14,250, 21,600. These are the increase in bad debts. Now return required 2,944, then 5,889, 9,167, 13,750. That's it. So we have taken the total gain 3,450 plus 2,944, 6,394. 6,394, 6,960 plus 5,889, 12,849. Similarly, 14,250 plus 9,167, it comes to 23,417. Last one, 21,600 plus 13,750, 35,350. 5,350. This is loss. Loss because cost is more than benefit. Benefit we are getting only 30,000, whereas cost is 35,350. So 5,350 is the net loss. We should not pursue. We should not take this policy. Now 25,000 minus 23,470, 1,583 profit, net gain. Then 16,000 minus 12,849, 3,151. Last one, 10,000 minus 6,394, 3,606. That's it. Over. Now we have to give the conclusion. Which policy is the better policy? A policy we are having a gain of 3,606. B policy 3,115. C policy 1,583 and D policy there is net loss. So out of these four policies, in which policy we have more net gain? A policy. So we give the conclusion. It is suggested to adopt the proposed policy A, since in this case the net gain is more, 3,606. That's it. So take a pause of this screen and you can copy down the complete solution. Now see the next problem, 18th one. JCO Limited is examining the question of relaxing its credit policy. It sells at present 20,000 units at a price of 100 rupees per unit. The variable cost per unit 80 and the average cost per unit at the sales volume is 92. So 92 average cost है, 80 rupees fixed cost है. So 92 minus 80, 12 rupees. Per unit fixed cost is 12 rupees. And how many units at present we are making? 20,000. So 20,000 into 12, you will get the total fixed cost just like the previous problem. All the sales are on credit, the average collection period 36 days presently. A relaxed credit policy is expected to increase the sales by 10%. So presently sales 20,000 units hai अगर रिलैक्स कर देंगे तो 10% सेल्स बढ़ जाएगा, तो 20,000 का 10% 2,000, तो 20,000 plus 2,000, 22,000 will be the sales in the proposed policy. And the average collection period to 60 days. So presently we are allowing 36 days. Now we want to increase it to 60 days. Assuming 15% financial cost on additional investment, should the firm relax its credit policy? This problem you can do it yourself. There are no bad debts. There are no bad debts. So only the thing is, one increase in profit you will get, and lastly return on additional funds invested in receivables. So exactly same problem, you can do this 18th problem yourself. 19th one. A company has rupees 10 lakh sales per annum and sells its product at a sale price of 10 rupees per unit. So 10 lakh divided by 10, you will get 1 lakh units. Variable cost per unit 6 rupees and the average cost 7 rupees. तो 7 rupees average cost है और 6 rupees variable cost है, तो 1 rupee fixed cost per unit. तो 1 rupee into presently how many units are made? 1 lakh. 10 lakh rupees divided by 10. Total sales 10 lakh है और एक यूनिट का सेलिंग प्राइस 10 rupees. तो 10 lakh divided by 10, 1 lakh. Presently we are selling 1 lakh units and the fixed cost per unit is 1 rupee. So 1 lakh units into 1 rupee is equal to 1 lakh rupees. So rupees 1 lakh is the total fixed cost. It will remain same. Fixed cost will remain same. It offers 20 days credit, 20 days credit, and ACP is 30 days. So normally 20 days we are allowing, but average collection period 30 days. So we should not consider the 20 days. So average collection period at present we are giving 30 days. Present bad debts 1% of sales and collection cost are 2% of sales. ये new point. Collection cost 2% of sales. Return on investment 15%. If the credit period is raised to 30 days, ACP is expected to increase to 45 days. So average collection period 45 days. Current collection period 30 days. Present policy 30 days, proposed policy 45. And bad debts to 2%. Sales will rise by 10,000 units. So presently we are 1 lakh units we are selling. Now it will be 1 lakh 10,000 units. Collection cost will remain unchanged. तो इसका मतलब जो collection charges है उससे कोई फर्क नहीं पड़ेगा. Ignore collection charges. Ignore the collection charges. Don't take collection charges. Should the company relax the credit period? Again, you can do yourself. Exactly same problem. Exactly same problem. Collection charges does not make any difference. So just ignore the collection charges and take into consideration increase in profit, increase in bad debts, and then return on additional funds invested in receivables. That's it. Now see the 20th problem. Problem number 20. A firm has credit sales amounting to rupees 32 lakhs. The sale price per unit is 40 rupees. तो 32 लाख रुपीस का टोटल सेल्स है और सेलिंग प्राइस 40 रुपीस है. डिवाइड कर दिया तो पर यूनिट आ जाता 32 lakh divided by 40. You are getting 80,000 units. So presently we are selling 80,000 units. The variable cost 25 rupees while the average cost per unit is 32. Variable cost 25. Average cost 32. So 32 minus 25, you are getting 7 rupees. So per unit fixed cost is 7 rupees. So presently how many units we are making? Just now we have calculated 80,000. 80,000 into 7 will get the total fixed cost in working note we calculate. Then the average age of account receivable of the firm is 72 days. Presently we are allowing 72 days. The firm is planning to tighten the credit standard. It will result in a fall in the sales volume at rupees 28 lakhs. अब अगर ये प्रॉब्लम टाइटर स्ट्रिक्टर पॉलिसी का है, लिबरल पॉलिसी नहीं है ये. Presently we are allowing 72 days. Now the proposed policy we want to reduce it to 45 days and the average account receivable to 45 days. तो presently जो 72 days दे रहे थे अब उसको कम करके 45 days देंगे. अगर ऐसा करें तो सेल्स 32 लाख रुपीस से कम होकर 28 लाख रुपीस हो जाएगा. Assume 20% rate of return. Is the proposal under consideration feasible? अब ये proposal feasible है या नहीं है? तो stricter policy. This is a problem of stricter policy. See here. Present number of units or present number of units is equal to 32 lakhs divided by rupees 40 comes to 80,000 units. Right? Now proposed number of units is equal to 28 lakh divided by 40. So it will become 28 lakh divided by 40, 70,000. The sales will decrease by 10,000 units. Now, average cost per unit. Average cost per unit is 32. Minus variable cost per unit is equal to 25. Fixed cost per unit. Total fixed cost is equal to 80,000 units into rupees 7. 80,000 into 7. It comes to 5,60,000. This is the total fixed cost we have calculated. Now we can take evaluation of proposed credit policy. Stricter policy. Now, present credit period. Present credit period is given in the problem as 72 days. Proposed credit period 45 days. And number of units at present 80,000. Proposed policy 70,000. Selling price per unit is 40 rupees. So it will be 32 lakh. It will be 28 lakhs. Variable cost per unit is 25. So 80,000 into 25. 80,000 into 25. That comes to 20 lakh. 70,000 into 25. 17 lakh 50,000. Fixed cost 5 lakh 60,000. Now 25 lakh 60,000. Here it will be 7, 8, 9, 10, 3. 23 lakh 10,000. 17 lakh 50,000 plus 5 lakh 60. 23 lakh 10,000. Now profit. 32 lakh minus 25 lakh 60,000. It comes to 6 lakh 40,000. Here it is 28 lakh minus 23 lakh 10,000. 4 lakh 90,000. Now we have decrease in profit. Decrease in profit. Minus 6 lakh 40,000. 1 lakh 50,000. 1 lakh 50,000 is the decrease. Is there any bad debts given in the problem? No. The bad debts are not given, put a dash. Then investment in receivables. investment in receivables. So what is the total cost? 25 lakh 60,000 into 72 divided by, it is given in the problem, is it given 365 or 360? We can take 365, anything we can take. Then 23 lakh 10,000 into 45 by 365. So 25 lakh 60,000 into 72 divide by 365. It comes to 5 lakh 4,986. 5 lakh 4,986. Next one, 23 lakh 10,000 into 45 divided by 365. It comes to 2 lakh 84,000. Sorry. Correct. 23 lakh 10,000 into 45 divided by 365. It is 2 lakh 84,000 795. Now additional funds नहीं आएगा बल्कि decrease. Investment in receivables at the rate of 20%. Decrease in the investment in receivables at the rate. So 504,986 minus 284,795. 2,20,000 191 into 20%. 44,000 038. 2,20,000 191 into 20%. 44,000 038. $44,038. That's it. So we have calculated. Now we have to make a trade-off between benefit and cost. Trade-off between benefit and cost. Benefit. Returns saved on decrease in investment in receivables. How much? 44,000 038. Costs. Decrease in profit. Profit decreased by 1,50,000. Net gain or loss 44,038. There is a loss because our cost is more. 1,50,000 minus 44,038 comes to 1,05,962. There is a loss. So ultimately our conclusion is, it is suggested not to adopt the proposed stricter policy, because in the stricter policy there is a net loss. There is a net loss. The cost is more. Our profit will decrease by 1,50,000, whereas the return saved on decrease in investment is only 44,038. So we suggest not to go for stricter policy, but continue the present policy of 72 days. That is the conclusion. Pause and take. Now the last problem. See the last one. A company has annual credit sales of rupees 10 lakh and gross profit margin of 30%, GP. it has current assets in account receivable worth rupees 1 lakh. How much average inventory should the company carry if the management desires an inventory turnover ratio to be 5.2? यानी average inventory कितना रखना चाहिए? Management desire कर रहा है कि inventory turnover ratio 5.2. What will be the effect on average collection period if the management desires that the average balance of account receivable per annum should remain at 75,000 rupees? Assume 360 days in a year. So two questions are asked. The first question, how much inventory should we maintain, and how much is the balance, average balance of account receivable per annum? What will the effect on average collection period? What will the effect on average collection period? These two questions are asked. First of all, net credit sales. This is a problem number 21. Last problem. Net credit sales is equal to 10 lakhs. Gross profit ratio is equal to 30%. So gross profit is equal to 30% of 10 lakh. GP is equal to 3 lakh. Cost of goods sold, COGS, cost of goods sold, the formula is sales minus GP. So COGS is equal to 10 lakh minus 3 lakh. So COGS, cost of goods sold, is 7 lakh. Now inventory turnover ratio. The formula for inventory turnover ratio is cost of goods sold divided by average inventory. The formula for inventory turnover ratio is COGS by average inventory. So inventory turnover ratio is given in the problem 5.2. See the problem, 5.2 is the inventory turnover ratio given. COGS just now we have calculated. Divided by average inventory. Now we'll make a cross multiplication. 5.2 average inventory is equal to 7 lakh. Then average inventory is equal to 7 lakh divided by 5.2. Average inventory is equal to 1,34,650. First question we have completed. The first part it is asking you what is the average inventory. Average inventory का formula है, inventory turnover ratio का formula है COGS by average stock. Average inventory. Inventory turnover ratio is given in the problem. COGS just now we have calculated. Cross multiply will get average inventory. Secondly, it is asking you to find out the average collection period. So stock velocity, one more formula is there. Stock velocity is equal to number of days in a year. Number of days in a year divided by stock turnover ratio. Stock inventory का मतलब एक ही है. तो stock velocity is equal to, we assume 360 days in a year. Average credit sales per day. So total sales are 10 lakh divided by average sales per day. How many days are there? 360 days. We are supposing 360 days in a year. So average comes to rupees 2,778. So एक दिन का sales per day, the sales comes to 2,778. Now average collection period. Average collection period is equal to average debtors divided by average sales per day. So average debtors are given in the problem. 75,000 rupees debtors are to be maintained given in the problem. Balance of accounts to be maintained are 75,000. and per day sales are 2778. So it will become 27 days. Ultimately average collection period it is asking. And average collection period कितना होगा? तो 75,000 rupees के debtors maintain करें तो it comes to 27 days. So first we are calculating per day. Per day how much? So here presently 69.23 days is the stock velocity. This is the average collection period. लेकिन 75,000 rupees अगर debtors maintain करेंगे तो 75,000 के लिए कितना period होगा? So it comes to 27 days. That's it. So this is the end of all the problems on receivables management. So this topic is not so difficult. So far we have completed cash management, receivables management. The next topic is inventory management. Then still to be completed inventory management, working capital management and dividend policies. Still in this unit. These three items, these three topics if we complete, then we'll finish the unit number 4. Right? So in the next session, we'll discuss about inventory management.